The Reventure Consulting 2022 housing market predictions are here, and let me tell you folks, we are in for a wild and crazy time in US real estate over the next 12 months. We have big macroeconomic factors at play like rising interest rates, higher inflation, a record amount of new home building, and a massive foreclosure wave that is going to crash certain housing markets around America. Meanwhile, record low inventory levels and strong fundamentals are going to support other parts of the country which are going to continue appreciating over 2022. And the bottom line is this: if you're a home buyer or real estate investor right now, you need to be ahead of the curve. You need to be looking at the data going into 2022 so you can make a better decision. Because let me tell you folks, home prices both in nominal and inflation adjusted terms are at their highest levels ever today, and they will be going down over the next couple of years. So you want to protect yourself as a home buyer investor, you want to protect yourself as a homeowner, and make sure you're in the right markets at the right time. These top 10 housing market predictions for 2022 are going to help you do that. So without further ado, let's get into the data. Starting with our number 10 prediction revolving around the massive home building boom that's occurring across America right now. That's right, home builders are out in full force, and I expect to see over 1.5 million homes and apartments completed in 2022. That will be the highest level America has experienced since 2006, which was the peak of the last housing bubble. And this surge in new building and completions is going to provide much needed inventory to the US housing market, especially in Sunbelt markets across Florida and Texas, which have had some of the biggest surges in home building in America over the last 12 months. And as you can see on this graph, in 2021, we hit 1.6 million housing starts according to the US Census. That is the highest level we have seen since 2006, and it's above the long-term 30-year average. And typically it takes anywhere between 6 to 18 months for a housing start to turn into completion. So those 1.6 million starts in 2021 will turn into completions in 2022, and like I said before, provide much needed inventory and potentially a deluge of new home inventory in certain parts of the country. In addition, our number 9 prediction will also increase the amount of inventory on the market, and that is a prediction of a big foreclosure wave in 2022. 2022 is going to be the year of the foreclosure, and that's because we have a massive backlog of homeowners and borrowers who are seriously delinquent on their loans, who haven't paid their loans in over 3 months. Well, there's a backlog of people who aren't paying, and now all of a sudden in 2022, the ban on foreclosures that's existed over the last 18 months, that is getting lifted as of January 1st, 2022, and so it's going to start to be open season for banks to foreclose. And you can see this foreclosure backlog on this graph, where the yellow line represents the amount of borrowers who are seriously delinquent on their mortgage, aka they haven't made mortgage payments to the bank for over 90 days. Right now that number is 1 million, which is very high by historical norms. That's similar to what it was in 2013, 2014, coming out of the last housing crash. Now, normally the number of seriously delinquent loans and then the blue line foreclosures matches each other. However, over the last 2 years, we've seen foreclosures go down even as seriously delinquent loans have gone up. And basically this gap between the yellow and the blue line represents the backlog of foreclosures that will start to process through the system in 2022. There's probably going to be 1 million backlog foreclosures coming. Now, many of you might be saying, wait a minute, I heard about this foreclosure thing about 4 or 5 months ago and we haven't seen foreclosures yet. What gives? Well, here's the thing. While the foreclosure ban in America was lifted on September 30th of 2021, the Consumer Financial and Protection Bureau added additional layers of regulation that basically said banks weren't allowed to foreclose until January 1st, 2022 for anyone who went into default during COVID. So expect to see a lot of foreclosures start hitting the market in the first quarter of 2022, or maybe if people aren't foreclosed on, maybe these defaulted borrowers will elect to sell their home. Either way, it's going to be a lot more inventory coming to the market from these defaulted borrowers, which is a great thing for you as a home buyer, and that's also going to push prices down. However, for our number 8 prediction, I don't think the lifting of this foreclosure ban is going to have much of an effect on this state. I believe this state is going to be the number 1 housing market in America in 2022. We're going to continue to see price appreciation here. Inventory is at record lows. There's nothing on the market. It's been that way in this state for the last 6 months. Tons and tons of people are moving here. Where am I talking about? That would be Florida. That's right. Florida is going to be the top housing market in America in 2022. Inventory levels today are, get this, 47% below where they were a year ago, according to Realtor.com. DotCom. That means if you're a home buyer in Florida or an investor right now, there's nothing on the market, particularly in Southeast Florida in Miami, Southwest Florida in Naples and Cape Coral and Fort Myers. There is nothing available. Prices are already up 30% year over year. I think they're going to go up more in 2022. And the primary reason that Florida's housing market is so strong right now is amazing migration figures. The 2021 data just came in from the US Census and showed that Florida had the highest inbound migration in nominal terms of any state in the US. Lots of people from New York moving to Florida, lots of people from California moving there, and that's providing strong support for the housing market. Expect prices in the state of Florida to go up by another 10% in 2020, which is of course great news if you're an existing owner, bad news if you're a buyer. However, I do want to offer a word of caution for anyone looking into Florida. Florida has two big headwinds for the long run, which I believe are going to push prices down. Number one is a massive surge in home building. Florida has the biggest surge of home building of any state in the US. Florida also has the oldest homeowner population in America, which is not going to be so great as America's population continues to age. So Florida, good in 2022, but after 2022, maybe start to exercise some caution. Now, while Florida has been a top migration market over the last couple of years, so have cities like Austin, Boise, Salt Lake City, and Denver. They have been some of the top growth markets in terms of inward people moving there, in terms of job growth. And our number 7 prediction is saying that that is no longer going to be the case. Austin, Boise, Denver, and Salt Lake are going to go from being places that are getting a lot of growth to less growth. But quite simply, the prices in these all-star growth cities have gotten way, way too high, and normal people can no longer afford to live there. We're going to see lots of outward migration in Austin over the next year or two, in Denver, in Salt Lake, in Boise, and that is, of course, going to create massive problems for these housing markets, which benefited from inbound migration the last 5 years. Well, now they're going to have to get used to reduced levels of growth. And you can see what I'm talking about with real-time data from Redfin, which is showing a big decline in users searching in a metro like Austin, searching in a metro like Salt Lake. Just take a look at the peak that occurred in these areas during the pandemic and now the decline that's occurring. And so for my number 7 prediction, I am saying that Austin, Boise, Salt Lake, and Denver, these are no longer going to be strong growth markets. These are has-been growth markets, and there's now going to be a new set of cities that's going to replace them as the top migration and job growth markets in America. If you want to hear more about those cities, the 7 cities that I believe are going to be the next Austin, the next Denver, I did a video on it about a week ago. There's going to be a link to it in the description. Now, a big thing to remember about the 2022 housing market, a big change that's occurring, is going to be in interest in mortgage rates. Over the last 2 years in America, we had the lowest interest in mortgage rates of all time. The Fed cut rates, they did quantitative easing. Mortgage rates went down to almost 2.7% during the heart of the pandemic, making it very cheap and easy to borrow. However, over the last couple months, rates have been creeping up. Now the 30-year fixed mortgage rate is 3.2%. And by the end of 2022, I believe the 30-year fixed mortgage rate is going to be 4%. And that's my number 6 prediction. A big increase in mortgage rates in 2022, which is going to cause a big short-term increase in the cost of borrowing, which is going to push home prices down. And to get a sense for how severe this is going to be, just take a look at this graph, which is comparing the typical monthly mortgage payment in America to the 30-year fixed mortgage rate. And you can see we're around a $1,460 monthly mortgage payment at the end of 2021 with a 3.1% fixed mortgage rate. But watch what happens, everyone, when we increase this mortgage rate to 4%. Quick 5-second break, everyone. If you guys are enjoying the data in this video, please just hit the like button. That's the best way that you can support this channel, is hitting that like button. All of a sudden, the monthly payment goes up to $1,622. That's a 12% increase in the monthly mortgage payment, just because the mortgage rate went from 3.1 to 4%. And that 12% increase in borrowing costs is going to create big problems across the US housing market. It's going to mean, number one, fewer and fewer borrowers will be able to afford to buy a home, will be able to afford the monthly payments. In addition, higher interest rates is going to make other investments more attractive to investors, which means investor demand in the housing market will also go down. Now, one reason that interest and mortgage rates are going to be going up is due to inflation. Inflation in America has registered nearly 7% over the last year, and that's the highest level that we've seen in the last 4 decades. And due to this higher inflation, we're going to see higher interest rates. Now, I believe for my number 5 prediction that inflation is going to moderate a bit. It's going to moderate down to 5% increase in 2022, which is still going to be high. And this higher level of inflation is actually going to have a negative impact on the US housing market and cut demand and prices. To get a sense for why this is, take a look at this survey that Redfin just came out with. They asked people, how is inflation influencing your future plans plans around home buying or selling. Check this out, folks. 29% of respondents said that inflation has made me delay my home buying plans, whereas only 24% of respondents said that inflation has made them move up their home buying plans. So just get that straight, everyone. People are saying to themselves due to higher inflation that they don't want to buy a home today. They want to push it off, and that's kind of counterintuitive to what conventional wisdom is. Conventional wisdom about inflation says that you should want to buy a home today because of higher inflation, but yet when Redfin surveys home buyers are saying no, 29% say I want to delay my plans, and then 11% say inflation made me cancel my home buying plan. And why would that be? Why would inflation actually be a hindrance to the US housing market? Well, it's simple. People are taking home less money. Inflation adjusted wages in America are lower today than they were 12 months ago, and that means people are poorer. And when people feel poorer, they're less inclined to want to make a big financial purchase like buying a home. Something else to consider is that the last 2 times America has experienced an inflation spike kind of similar to what we're seeing today, the last 2 times that happened was the mid-2000s, 05 to 08, and then the late 80s, early 90s, 88 to 91. Both of these previous inflation spikes corresponded to housing crashes. That's right, we had a pretty big housing crash in the US in the early 90s, particularly in certain cities, and then of course we had a massive housing crash in the mid to late 2000s. So actually the last 2 times we had inflationary pressure in the US, we had a housing crash. I believe the same thing is going to play out this time around too, that the inflation we're seeing today, rather than being beneficial for the housing market, is going to hurt the housing market. But the impact of inflation and higher mortgage rates is not going to be the same on all cities around America. While I do believe there's going to be a general decline in the market, certain cities are going to get hit hard. Other cities are not going to get hit so hard by this rising interest rate and inflationary environment. And for Reventure Consulting's number 4 prediction, we are predicting that the markets that are going to get hit hardest in 2022, particularly by this higher inflation and interest rate environment, are going to be on the west coast of the US, the markets in red. And why is that the case? It's because the markets in red have the most expensive home prices relative to how much money people make. They also have the highest increase in mortgage payments over the last 15 years. So there's really already very stretched affordability in a market like Denver, or a market like Salt Lake City, or a place like Boise, or of course almost everywhere in coastal California, as well as Austin, Texas. These are markets where the home prices are about 10 times or more than the annual earnings that people bring home with their paycheck. And that means that higher inflation, which reduces inflation-adjusted earnings, and higher interest in mortgage rates, which increase the cost of borrowing, that means it's going to be felt more in the markets with already reduced affordability. These markets in red are going to crash first. They're going to have the biggest declines in prices in 2022. Meanwhile, the markets in yellow are more protected from the situation. Often markets in the Midwest and Deep South have much more affordability. Home prices are much lower in a place like St. Louis, or Charleston, West Virginia, or Pittsburgh, or even Oklahoma City. These markets will not be as negatively impacted by inflation and interest rates, and actually might even be helped a bit by higher inflation. Now, I hope you guys have stuck with me so far. Predictions number 10 through 4, we have a lot of things going on in the housing market. More home building, a big increase in foreclosures coming, changes in migration trends are going to occur. We're also going to have higher inflation and interest rates. That's going to crash certain markets. It's going to be better for other markets. But now moving into our top 3 predictions. These are ones that you really need to be paying attention to. I'm going to reveal to you the state that I believe is going to perform worst. I'm also going to reveal to you overall how much I think home prices are going to go up in America. But first, for our number 3 prediction, we're going to talk about actually a more macroeconomic issue, and that is .com bust 2.0, which will be coming in 2022. That's right. I believe we are in for another tech collapse similar to the one that we had in the early 2000s when the NASDAQ went down by 70 to 80%. I believe we are in a similar tech bubble today that we were before back then, and I believe we're going to see big pain across technology stocks, a lot of companies going bankrupt, laying people off. In addition, venture capital tech companies are also going to suffer, and that's going to mean big pain for certain housing markets in America that rely heavily on tech for demand. And to give you all some context for how bad this could be, we're looking at the level of the NASDAQ Composite Index over the last 30 or 40 years here, which is the index which tracks technology stocks. And you can see here from its peak in early 2000, the NASDAQ crashed by about 75% all the way through '02. That was .com bust one. And .com bust one had a big impact on tech hubs in America. You can see here that the markets with the biggest job losses in America from '01 to '03 were Salt Lake City, Austin, Texas, Portland, Oregon, Seattle, Washington, Denver, Colorado, Boston, San Francisco, and then whoa Nelly, San Jose lost nearly 20% of their jobs from '01 to '03. So if we have another tech collapse, a .com bust 2.0, I believe it's going to be the same type of cities that suffer. Expect to see the Bay Area get crushed. Expect to see Austin and Denver struggle. Expect to see Seattle struggle, because with higher interest rates, again, these higher interest rates is going to negatively affect tech. It's going to cause a lot of the unprofitable recent tech IPOs to collapse. It's going to cause a lot of layoffs. It's going to cause a lot of VC startups to go under. And that's primarily going to impact like 10 cities that rely heavily on tech. And the housing markets there are going to suffer even more as a result. But while these tech cities are going to suffer in 2022, they're not going to suffer as much as our worst housing market in America for 2022. This state is going to see the biggest price declines in 2022, bar none. We're already seeing price declines actually in this state, particularly in a certain city. The inventory levels are already off the charts, whereas most states have had a decline in inventory. This state has had a massive increase in inventory, and we're just going to see massive pain in Idaho. Idaho is going to be the hardest hit housing market in America in 2022, and it's not even going to be close. Just take a look at this map, which tracks year-over-year levels of active inventory in different states across America. And you can see almost every state is red, meaning that there's been a decline in inventory. We talked about Florida before, where the inventory levels have gone down. The listings have gone down by 47% year-over-year. You can see South Carolina, they're down by 38%. North Carolina, they're down by 30%. Even in California, which has its own struggles, listings are down by 27%. Yet in Idaho, they are up by 63%. Look at this shining green beacon of higher inventory. While inventory in every other market is down, in Idaho, it is way up, and that means prices in Idaho are going down. In addition, we actually see inventory in Oregon is slightly up, while Utah and Arizona are only slightly down. And I believe this also corresponds again with the general area where we're going to see the housing crash start. And overall, for my final prediction here, the Reventure Consulting final prediction, we are going to see home prices in America be flat overall in 2022. We're going to see no growth on average in America, but of course, big differences around that average. As I just discussed, Idaho is going to get hit hard. I'm seeing minus 15% in just 1 year in 2022 in Idaho. It's going to be very, very tough for Idaho's housing market. Utah's housing market is also going to get hit hard. So is Oregon's. So is San Francisco's. The Bay Area, I think, is going to go down by 10% in 2022. I think Austin's going to go down by 10%. I think Denver and Phoenix are going to go down by 5 to 10%, as we're going to see the western half of America lead this housing crash. It's going to happen here first over the next couple months in 2022, and then it's going to slowly spread to the rest of the country. And the crash has started, folks. It's already started, and it's going to last a while. The typical housing crash in America, the typical local housing crash lasts 5 years. 2022 is going to be the first year where prices really start to go down, but it's not going to be the last. Prices are going to go down again in 2023, maybe even by more than 2022, and then they're going to continue to go down for a couple more years. This is how housing crashes behave. It's a slow motion crash, and it's important for a lot of you to remember that. Home prices are not going to go down the way that stock prices go down. It's not going to be 50% in 6 months. It's going to be 30% over 5 years. And if you are buying a home or real estate investment property today, you need to understand that this is not a good time to do it. As I said in the intro, inflation-adjusted home prices are at an all-time high as we're entering a contractionary time for policy around the housing market. That means it's a bad time to buy a home. Of course, some of you want to buy a home for you and your family, and you might not care so much if prices go down. But if you do buy, it's important to know that they probably will over the next 5 years. But they're going to go down by a lot more on the West Coast. They're going to go down by a lot more in tech hubs. They're going to go down by a lot more in places with bad affordability. You're going to protect yourself more by being in the Midwest and Deep South, where there's a lot more affordability and higher rates are not going to screw with the housing market as much. All right, everyone, I hope you enjoyed this video. I hope you all reference back to this video throughout the year. Make sure to bookmark it. Make sure to watch it again so you can understand what all the predictions are saying. If you did appreciate this data, make sure to just smash that like button. That's the best way you can support me in this channel. In addition, make sure you're also a subscriber. I come out with 3 of these data-driven videos per week, and now that the housing market's turning, you're not going to want to miss this content. All right, everyone, until next time, this is Nick from Reventure Consulting signing off.